Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. With me, my good friend and special guest, Dr. Friday with Dr. Friday's Tax and Financial Services over in Brentwood, Tennessee. She is a tax expert for individuals and small business owners. And it's Enrolled Agent Week.
That's what I am. I'm an enrolled agent.
And tell us what, so Enrolled Agent Week.
Well, Enrolled Agent, the governor gave us from January 29th to February 2nd, basically as an awareness week to let people, I mean, this is the time if you're ever going to really look to get an enrolled agent to do your tax preparation. An enrolled agent is the only one that's really licensed by the Internal Revenue Service to do taxation and representation. So if you're looking for someone that really knows their taxes, that study it 24/7, 365 days a year, you need to go to someone that's what they do.
And this goes with people, so someone's having problems with the IRS.
Oh, absolutely. I mean, that's probably more,
plus.
Yes, exactly. Doing tax preparation is a small part of the whole package, but dealing with IRS issues, filing back taxes, helping people with estate plans, filing taxes for nonprofits, all those, that's the kind of things that we do all the time.
There we go. And by the way, if you want to get a hold of Dr. Friday, you can call our office or you can give her a call directly at 615-367-0819. There we go. And we're going to take another caller here. This is Ron. Ron, welcome to the Retirement Report.
Hey, Ron.
There we go.
Yes, I have a tax question about the college credits that are available. This year I'm going to make over $180,000, so I'm not going to be eligible.
Not this year, but next year you will be.
Next year will be great, but
I'm looking for the positive. Go ahead. Sorry, I didn't mean to cut you off, Rob.
But what I was wondering if I can transfer that to my student. She made like $17,000.
Absolutely, but you can't claim her. She will, and at $17,000, theoretically, the IRS would say she should be filing her own taxes anyways.
Oh, really?
Yeah. I know you're probably taking more than 50% of her care, and there wouldn't be a question if she was on your return probably, but in essence, $17,000 is an independent age and rate, so she would actually could possibly qualify for up to $2,500 credit.
Okay, that sounds great. My only concern is she's on my insurance.
That doesn't make any difference at all, because up to 25 she could be on your insurance. Theoretically, she could be married and still on your insurance.
So even if I don't claim her, she can still be on my insurance because I'll just have her file her own and
exactly
same thing. Two different rules entirely.
Yeah.
One has nothing to do with the other.
Aren't you glad they're simplifying everything?
Yes. So she can go ahead and claim herself.
And on that tax return, she would mark that she has health insurance, and you have a 1095 A, B, C, or D, whatever, depending on if it's employer based or if you're in the marketplace, and she would then list that information that she has it.
And she can
you made my day.
Good.
And she can set up an IRA, a Roth IRA, something like that as well.
There you go. He's always looking for a way to save more money. She spent all 17. She's in college.
Yeah, well, hey, there you go, Dad. It's a great way to give a nice gift to your kid.
I'm feeling good about that answer. Thank you very much.
No problem.
Take care.
Yeah.
Bye now.
She gets the credit back, and then Dad takes it and puts it into an IRA for her.
There you go. Life is good. All right. Now we have Kina on. Welcome to the Retirement Report.
Hi, good morning. I have a couple of questions.
Okay.
First of all, I'd like to know why is it that a person who is not employed, why are they not able to have a Roth IRA?
Right.
And the second question, go ahead and answer that, Bill.
So your question is that you're not able to contribute without having earned income. Is that it?
Yes.
Yeah, that's correct.
Yeah.
So you have to have earned income. Roths are nice because you can, there's no age limit, which unlike a traditional IRA at 70 and a half, you can no longer contribute money into a traditional IRA. However, with a Roth IRA, you can
as long as your spouse
still contribute as long as you have wages, or if you're married, if at least one of you has wages,
marry a younger person, they can do it all the way up. Kina, are you married?
No, I'm single, and I'm on Social Security.
Gotcha.
Okay. So yes, if without earned income, unfortunately, cannot contribute any longer to the Roth or traditional IRA.
Right.
And the second question is, what are some good, I suppose, fixed investments?
Good question.
Yeah.
Because I heard you guys speaking earlier about the stock market and the volatility of it.
Right.
But what would be as good? Because if the stocks rise, of course you do well.
Correct.
So what kind of safer investments are there for your money?
Right. Well,
Don't
you know,
wanna
one of
put
the
it all
things.
in stock.
Sure. One of the things that we look at, and by the way, what we'll do, Keena, get your information. Well, in fact, do it this way. Call my office, and I'll get you out a copy of my book, all right? And with that, there's Chapter 4, Safe Money Investments, and I'll answer your question. All right, here's one of the things to look at. When it gets into safe money, you have things, of course, like CDs, you have fixed annuities. These give you a set amount of interest for a specified period of time, and then you're done. So an example would be a 5-year fixed annuity right now is paying a little over 3% per year. At the end of that time frame, you can see what rates are. Do you renew it? Do you do something else with your money? That's the way those work. Just like a CD, as I mentioned. The next thing you look at is the portfolio construction I mentioned. So asset allocation. If I'm worried about the market and I want to reduce my volatility, maybe I go with a conservative portfolio, 25% stocks, 75%. That's going to be an investment grade, short to intermediate term bonds. And this is going to help me reduce that volatility. An example would be in 08, one of the worst years in the history of the stock market. We hadn't seen a year that bad since 1933, in fact. And even in that year, when the market dropped 38%, a conservative portfolio such as I'm describing only dropped about 8%. And the very next year, it regained that 8%. Okay, so if I'm looking to reduce my volatility and still get a return, and that portfolio averaged around 5% over the last 10 years. All right, so that's one way. Another, and again, you can see what I'm weighting it with is a lot of investment grade, short and intermediate term bonds. Now, bond markets aren't totally without risk, just greatly reduced risk. The next is fixed index annuities. All right, now this is one you want to, by the way, when I talk about annuities, I've talked fixed index, and then there are variable. You want to avoid the variable annuities. Out of 1,000 different products, exactly about 800 of them are variable, and you want to get away from those. Fixed index annuities, you also have to be careful with. So an example would be a fixed index annuity. There are those that have fees, high fees sometimes, or they have caps in terms of how much you can earn. So just because I talk and say, look at this, doesn't mean that, all are equal. They're not. In fact, out of 1,000 different products, there's maybe about 25 to 30 that I would recommend. Wow. So it's a very small percentage, but that percentage are very good ones. They have some really good rates, very good as far as the potential for growth, no caps, either very low or no fees. That's the kind of thing you want to look at. And if you call my office, I can get you more information on that kind of thing and how it works. There's a way that you can get really good earnings and yet still protect your principal and keep your money safe.
That's important.
Okay.
All right?
Thanks, Keena.
All right, thanks. You have a good day. All right, one of the things, and we're going to take a break. When we get back, I'll get the number up on the screen again, and we'll get that offer out there for the first 10 callers. Okay, but first we're going to take a break. Join us here. We'll be right back on the Retirement Report.
Are you looking for an easy way to do your taxes? Dr. Friday here. I can help you keep more of